here with you. Hopefully, you guys didn't go do something else because we have a big show for you today. As I mentioned, we have eToro coming on in a bit to go over some new data and trends. But Shy and I were just talking about Sam Altman's claim that Meta is trying to poach their top AI talent for $100 million deals. I looked at that and thought it was BS. Shy says it's perfectly rational. Shy, continue with your line of thinking there.
All right, so okay. The reason I say that is because you hear Jensen make comment that there's gonna be $100 trillion being spent on AI infrastructure. What's $100 million for a team of 8? What, a bill? I just say
Mhm.
10 people, 100 mil each, $1 billion over the course of, I'm sure, 5-7 years. Like, it's pennies on what the opportunity is. And I think for Meta, you're experiencing like this like urgency from Zuck on their lack of mobility from their innovation front on Llama. Like, Meta is in a really interesting position among all the Max 7 names because they have so much mind share across all their products, WhatsApp, Instagram, Facebook, that their product is legit in every person's hand. It's really difficult. I don't know what the percentage of the world doesn't use any of their products, but it's probably minimal. So, like, having such an important component in the day-to-day consumer lives, like, they need to be able to capitalize on AI. And I think that Meta in 2023 was neck to neck with the OpenAIs, the DeepMinds, the Anthropics out there. I do think they've been not putting their foot off the gas pedal, but it's been either their competitors are just really catching up, or there isn't an innovation. Meta's not innovating as quickly as Zuck would hope in the past 2 years, and that's exactly why he's going for these talent grabs, or like creating the super engineering team, spending 15 bill on scale AI to get Alexander Wang inside the tent, because if you're Meta and you truly believe that AI isn't just the future of advertising they announced this past week, but it's actually going to be the operating system for your business, then owning the foundation matters. And that foundation is going to be AI. And within that AI foundation, it's going to have to be data, clean, label, structured, and a ton of it. And the dirty truth that most people outside of the field still miss is that LM models just don't win because they're big. Like, they win because they're trained on the right data. And that's why the scale AI is actually a really good acquisition. Yes, stupid pricey, like really pricey, but it's worth it because Meta knows it missed the early innings of the general purpose LLMs. View Llama. Like, Llama 3 was great. Llama 4 was lipstick of what Llama 3 is. The inference costs, I mentioned this, I think, yesterday, the inference costs, the latency, the deployment maturity just isn't there. And despite the branding of the open source nature of Llama, like, it isn't close to GPT-4. And so I think that Meta needs to kind of build something different. And in order to build something different, you need the talent in order to do so. So spending $1 billion just on talent, it makes sense when you're spending so many $1 billion of AI capex that it sounds weird when you put a spotlight on just the FTE investment of the AI capex, but when you put the under the whole bucket, it makes sense to me. It's fine because, like, they need to start controlling the data flywheel right now, and it's the risk of falling behind is far greater than the risk of overspending to make sure you're maintaining the lead.
Yeah. I mean, I guess now that you're talking, I'm like, the Mets dropped 765 mil on Juan Soto. So I guess that's a less consequential thing. But yeah, I'm just curious, like, he said that it's the culture is what's keeping his people there. And I'm like, how long is that gonna last? I mean, he must be like matching the offer, but can they even match the offer against a Meta? Like, I'm just curious long term. Like, for me, I'm like, yo, take the money. Like, I know you probably get a lot of good kombucha and snacks at OpenAI, but like, I would take the bag. So it's just interesting, like, as a long term sustainable talent war, but also just looking at like, man, I can't even envision what those people are doing in the day to day. Like, that's so beyond the realm of my understanding of what they're building, but like, can you imagine someone offering you $100 million to change jobs?
Well, think about this. It's a small team on OpenAI. So let's just
Yeah.
say if you work at OpenAI, you truly believe you're going to be a $1 trillion company, an app like an Apple-like company in the
Mm-hmm.
future. So the framing, 100 million is a ton of money. I'm not saying it's generational wealth. Like you'll have your grandkids, great grandkids just be okay in life, more
Mm-hmm.
than okay.
Yeah.
But I'm sure they're using the rhetoric of what's that one guy who sold a ton of Apple stock like in the millions when he would have been like one of the
The
rich. I
billion.
forgot his
Yeah.
name. He's infamous though of
Yeah.
like selling too quickly. I know that's everyone's biggest fear. Where if
Mm-hmm.
you're working at OpenAI, like you really believe you're going to create an Apple-like competing device, and who knows what that ceiling is. If you go on Meta, like, yeah, you'll get 100 million, which is great. I'm not saying it's not, but that's your ceiling. That really
Yeah.
is your ceiling. I think people don't want they want to look at the sky now, and they're willing to risk it in order to do so.
It is such a fascinating calculation to make. So we'll see where that goes. You also mentioned Meta in the context of advertising. They announced that they're enhancing advertising within WhatsApp. And Shy, when you were talking before, I grokked the stat we were trying to figure out of how much of the world's population Meta touches. It looks like their total audience across all products is about 4 billion. The the
Jeez.
the global population's now 8 billion though, which I was like, I remember when it was 6. That got aggressive really quickly. So about half of the world's population, which especially in like global emerging markets, they have more coverage there than others. Can you share a little bit about what you know about this new WhatsApp advertising and what impact could be on Meta's revenue moving forward?
Yeah, so I think Wells Fargo came out with a note this morning. Actually, or no, Morgan Stanley did. I think it could generate $5 billion by next year. So right now they're supposed to be making 188 billion this year.
Mm-hmm.
So it's like a couple percentage points higher, but it's going to gain momentum because again, it's 1.5 billion daily users use WhatsApp. And I think that the first wave of monetization will be 5 billion, but it's going to escalate drastically. And the implications on ads, like especially AI, like going off of what you asked about the Meta AI, I think towards the ads, like I think it's somewhat disruptive actually towards a lot of the ad tech players out there. Like for Trade Desk,
Mm-hmm.
for example, like I think I'm a little worried about Trade Desk, and it's not because like they're failing. Like I made this comment to I made a write up about this yesterday. I trimmed this week on my Trade Desk. It went from
Oh.
300 shares to 250 shares, but it's still like only a 2% position for me. And I think it's just because the rules of digital advertising are kind of being rewritten on the fly. And in this AI tsunami I always talk about in reference, like you have to be very quick to pivot if there's new information that's created on how disruptive AI could be in the specific thesis that you have of a company. And for over a decade, like Trade Desk was the smartest neutral party in a in a fragmented ecosystem. Like if you want to go outside the paid wall gardens, like you go to Trade Desk, like they stitch
Mhm.
together impressions across all devices, platforms, and publishers that couldn't really talk to each other. So it was like the connectivity layer between all these different avenues. But like what Meta's announcement was, even Amazon's like partnership with Roku this week, like
Yeah.
I do think that those walled gardens aren't just inventory sources anymore. I think they're becoming end-to-end ad platforms, like bundling the entire campaign lifecycle where they do the advertising for you. Like AI can just put in a picture of what you want the ethos to be of this campaign, and they handle the end to end of that. So I do think like one photo and a budget and a synopsis of what you want, and Meta's AI can just generate the creatives. They can just like optimize the targeting. They can run the multivariate testings and like allocate the spending necessary to maximize your efficiency. So like I do think there is going to be some noise now on like the Trade Desk out there, the App Lovins, the Magnites out and Reddit even. Like I don't know. There's certain themes that don't belong to be a standalone, and
Mhm.
they don't seem like that in today's reality, but they eventually morph into something like you have to be lumped into something else, like telehealth for telehealth, or just Zoom, like Zoom's product, videos, like that was a standalone product. Now you lump into everything else. Same with Adobe's product.
Yeah.
I'm worried that ad tech might be a little like that. So early innings. I'm not like selling my trade desk completely, but I have Amazon, I have Mercado Libre. I'm getting ad exposure through their ecosystem. Do I really need a standalone ad company that's not cheap anymore? Trade Desk is not as cheap as you'd think, and I feel like it's got a mountain to climb, but Jeff Green is the person to lead that journey. So like I have faith in him to figure it out, but I just wanted to make it a 2% position just until the noise clears.
Yeah, I mean, so this is a big week in the advertising community. The Cannes Lions Festival is happening in Nice.
Mm.
And that's when all of the CMOs, the ad agency people, the ad tech players all, go to the beach, drink rosé while they, lay off a lot of their employees, and then they come back and brag about it. I used to be at an agency, and this was actually the best week of the summer because all the grown-ups were gone. And so it's just a bunch of us at an ad agency chilling. But big news came out yesterday. I read it in Deadline that for the first time ever, streaming passed cable. So I
Mm-hmm.
I actually was surprised when I saw this because I assumed it had already happened. But basically, if you combine broadcast and cable TV, streaming topped it for the first time in the U.S. So streaming is now 44.8% of all U.S. TV screening viewing. Um, and that's all according to Nielsen, which tracks all of that stuff across all the places. So since 2021, when Nielsen started tracking this, streaming viewership is up 71%, broadcast and cable declining by 21%. So I think this is, to your point, like ad tech as it exists and how these companies were built is evolving. They started with just digital programmatic advertising and eventually had to kind of build out these connected TV practices, which is what you're seeing with like the Roku and the Amazon. So there's opportunity there with, I think, within the thematic, but it's about who's kind of best positioned in the new environment of connected TV. So it's definitely something to watch with the ad techs there. Although this is a trend that's been, likely priced in. It's been going on, but we did cross that
Mm-hmm.
threshold. Another thing that was interesting, the Deadline was reporting, was that YouTube had a record of 12.5% of the total viewing, so more than any other streaming service. So Google's YouTube, more than Pluto, Roku, Tubi, altogether, they just made up 6%. So good news for Google there. But to your point, if YouTube's within the Google ecosystem, they don't need the trade desk. So interesting developments there. I had thought that had already happened though. I don't know why. I just assumed.
I mean, I think you and I live in a New York and LA bubble,
Yeah.
maybe, but a lot of America, unfortunately, like it's just we're not exposed to the rural parts of America. But yeah, I mean, linear TV's dead, guys. It's been dead. It's dying, and CTV is the future, and that's why, like, maybe my slightly bearish note on Trade Desk, maybe that fear of competition doesn't matter because the CTV market is going to the tailwind of that market is going to be more than the headwind of what Meta and Amazon are doing. That could be the case. But yeah, I think CTV is going to morph into something. I still think YouTube should become a studio. Like, I really do think Google should start acquiring IP and become like go the Amazon and Apple routes. I don't see why they wouldn't, but yeah, it's one of those
You're just
names
like
that
that Hollywood bias though, Shy.
I could
You
be.
know?
I could be because I worked in the entertainment space. I could have like that little the goggles
You're
on
in
for
the
sure.
Sunset Strip. But yeah, I think they do have a lot of capital. It would be interesting. I want to ask you about something you tweeted last night because it was very mysterious, but you said you initiated a new position. I don't know if
Oh,
you're ready to disclose it,
yeah, I can
but
disclose it.
you
I can
said you
disclose it a little.
initiated, unless it's just for subscribe or whatever. I saw it and I was like, ooh, T. You said you initiated a new position in a sub $10 billion company with a growth portfolio. A lot of guesses coming in. Were any of the guesses right?
Yes, a lot of my subscribers guessed.
Oh,
So I
wow.
told my
Okay.
subscribers yesterday morning. I should um I should make a comment on that actually. I'm so bad at that stuff.
You left him hanging, Shy?
I left him hanging, so I need to make the comment on what it was.
Oh
Uh
my god. All right, maybe you could do that live and people could follow you there if you don't want to do it on the show. It's totally up to you. I didn't want to put you on
let
the
me do it
spot.
right now
Okay.
actually.
Wow,
But
this
to
is
answer the
real time.
question, it was Archer Aviation.
Okay. Yeah, you were
It
talking about them
was.
yesterday.
Yeah, a little breadcrumbs yesterday on it.
Yes.
Let me see. It was Archer.
Like a
Thank you for
Taylor
I'm
Swift.
so bad with this stuff. Like I would have like not I don't want to say blue balled, but like
Yeah.
whatever it's like more professionally equivalent to
It's
that.
fine. No, you know what's funny? My biggest pet peeve, this is not my what you did is not my pet peeve, but it's close, is when someone says they have something really, like, dramatic or interesting to tell you, and they're like, "Oh, actually, I can't say anything." And I'm like, "Don't say anything at all then."
How
Like,
dare you?
don't
Yeah.
even broach it. Like, I don't know what it is, like, it's the Italian, but, like, if I get a hint of, like, not knowing something, like, I need to know. So I was like I bookmarked it. I was like, "I'm asking him tomorrow. I don't care if he doesn't disclose it."
Well, yeah. I mean, I just made the comment right now on
Yeah.
it. It was Archer Aviation. You guys know how much I love my new age defense buckets. So I think Archer Aviation is a really interesting component of that, where they provide the mobility layer for the autonomous battle space. A lot of people kind of think of Archer Aviation like the Joby Aviation, like they have a duopoly eVTOL, and I think it's important. The reason I invested in Archer isn't because I believe in flying taxis. Like I think that's eventually going to happen, but I do believe the reason I believed in it and why it belongs in the new age defense bucket is I believe in airspace as infrastructure. Where the last
Mhm.
like decade or so, like we've been focusing on the evolution of defense budgets been towards AI, cloud, and cyber, rightfully so. Like it's going away from the missiles, jets, and tanks that you guys always hear me talking about towards AI, cyber, and cloud. But now I do think there's kind of something deeper shifting. And you're seeing a lot of the deal flow kind of go through that. A lot of doctrines getting rewritten, where the idea that um, the future battle space isn't just only digital that's going to evolve. It's going to also be physical, and it's not going to be on land or sea. It's going to be on air, low altitude, urban, contested air. Uh, you could think of drones as a good example of that. But like, I do think that there Archer fits perfectly in that because they do provide the flying taxis. I'm just gonna call them flying taxis, but really, they have a software component to them, and they have a platformization angle that Adobe Aviation doesn't really have, and they have a very tight partnership with Anduril, the private company that everyone's obsessed with, myself included. That I feel like it's going to be one of those things where a lot of the Anduril deals will have Archer as a plus one attached to
Mhm.
it, so I think it's going to carry a lot of with the Anduril momentum. They have a great partnership with Air Force, so that creates a lot of validation onto their um, product and technology. Because again, they're so early; it's pre-revenue. There's no commercialization yet, but I do think that Archer is in a place where if they make $1 billion in 2 years, which is what the estimates are, they're going to hit free cash flow positive in end of 2027. I think that the real story is going to now be seen where Archer becomes that connective tissue for a future where like airspace is going to be as programmable as the cloud, and whoever controls that layer controls like the access, the logistics, ultimately like a lot of the power. And I think the DoD knows that, and they're rewriting doctrines for that. And I was just like, it's an interesting spec play. It's worth under it's a $5 billion market cap. Anything else, like it's a really interesting angle on my new age defense. However, it's a small position. It's very pricey, in my opinion, at $10.
Mhm.
It's a lot of there's a forward demand vacuum that's being priced in right now. My comfort level would be closer to 6. So it's very small. I'm hoping to slowly build this up. But right now, like I infuse capital in my portfolio every month. Everything's extended right now. Like
Mhm.
either me build up cash or like I love this company. I love the tech, love the angle, don't love the valuation. Small position, I'll track it. But yeah, I think Archer is a really interesting defense angle for sure.
Do they get so they also have like a lot of these companies, they have the commercial uh application, then they have the defense. Do they give any indication of that 2 billion, like how much is coming from where? Like the commercial would seem farther
Oh,
away.
it's gonna be a lot of government
Yeah. Okay.
business, like the Air Force deal, for example. It's gonna like Palantir, for example. They just started doing commercial revenue like let's just say 3 years ago. Before it
Yeah.
was just government. I think these kind of disruptive technologies on the new age defense, they start with the government because for commercial to feel comfortable, they have like if the government uses them, their
Right.
stamp of approval. Fine. That's usually the route that's taken. That's like what Anduril is doing anyway. So I think it's more from the government. You guys all know how much we not overspend, we spend on the defense budget. So I just think like even
Yeah.
just $1 billion of the defense budget over the next 3 years next 2 years just goes towards Archer Aviation. Like that makes sense to me. Like it really does.
Yeah, it's interesting. I was just looking into it too because I'm like, why we have helicopters? Why? But I guess this is obviously EV. It's not fossil fuels, and it's quieter, which you could see in the context of war and missions. You don't want to announce you're coming on over. So, all right, that was breaking news. That's great. Shai's adding. That's definitely an on-brand one for you, I gotta say. Right in the new age of defense.
Yeah.
We're getting close here to the opening bell. Some of the other things we're tracking today, way on the other side of the spectrum, General Mills announcing they're getting rid of some of their synthetic dyes. This comes a day after Kraft Heinz said they're going to do the same. I really don't know what color Kool-Aid is going to be in the next couple years. But interesting to watch. There's the opening bell. This is, of course, all due to pressure from RFK. And the alternatives, the natural dyes, it's interesting. Some of it comes from plants. I also was reading that some of it comes from insects. And it's actually in its current state, using the natural dyes is more cost prohibited because you just need more volume of it. It's less concentrated. So you need more bugs to put into the Kool-Aid. So that's an interesting one to watch as well. I know shortly we'll have our guest coming on in, Bret Kenwell, who's an analyst, a lead analyst at eToro. I think we're going to bring him in shortly here. eToro has purview of all of the ongoings of retail investors. And so they release these great reports. And we're going to hear what was in the latest. Hey, Bret, good to see you again.
Hey.
Hey, thanks for having me.
Good morning. How are you doing?
I'm doing good. How are you?
Good. I know we have some new data from you hot off the press, right? Did that come out today?
Yeah, so today we had our latest retail investor beat survey results come in, and we had some interesting takeaways from it, mostly in regards to how investors are adjusting their portfolios amid geopolitical issues, increased volatility through late Q1, early Q2, and in light of a weaker U.S. dollar. So some fun insights in it this time.
Yeah, I was digging in this morning. Before we dive in, a question on like just the data window, because obviously it's like every week something's happening. When was the data captured? Is it reflective of end of May into June? How should we think about that?
Yeah, so the data is usually about 6 weeks. We capture it over a couple weeks span, about 6 weeks before we publish the results. So
got it.
At certain times it's perfect timing, other times it's not, but this time was a pretty interesting window.
Yeah, there's no way to time that perfectly. I spotted some interesting takeaways I had questions about, but would love from your vantage point. You look at these every month. What kind of popped out to you where you're like, huh, that's interesting?
I think the one that was kind of the most interesting to me. So for this survey, I guess to take a step back, for the surveys in general, we ask about 30 questions to retail investors, not necessarily our investors, but they're just retail investors as a whole, as a cohort. And about 20 of them, a little over 20, are about the same every quarter. So we kind of have that level to gauge how those trends are changing over time. One of those questions is, are you allocated to crypto assets? Mm-hmm. And in this quarter, we saw that number creep up to 35%. And that was the highest we had on record. And we've seen this steady increase, be it quarter over quarter or year over year. So last quarter it was 31%. A year ago it was 27%. So we continue to see this sort of, stepping higher into crypto allocations, which that part's not too surprising, and it skews younger, which again, that part's not surprising. But a few of the questions we ask, we can kind of change up either quarter by quarter or year by year. So we have this sort of the year over year lapping. But like in this instance, we were able to ask about gold because gold's been such a talking point over the last 6 months, especially year to date. And the thing that stuck out to me with that one was that investors were allocated to it, which is not too surprising, but it skewed younger again. I really
Yeah.
expected that to be the older investors, the boomers, the silent generation, even Gen X more, but it was really like Gen Z and millennials, particularly millennials, leading the charge on gold.
Yeah, that one stood out to me because when you think of like gold, you're not you're not thinking of like Gen Z, but they continue to surprise us. Is there any indication of like overlap between people invest? Is it either or? They're either gold or crypto, or are they people loading up on both of them?
That's a good question. So if we like hone in on the generations specifically, so like when you look at millennials, I think the question was along the lines of what we plan to allocate to in the future. And crypto was, or gold was 38%, crypto was 37%. So for those two, is really like neck and neck. I guess they love both of them. But if you go to like an older generation, it would skew much further towards gold than to crypto. But both of them are sort of in their playbook at this point in the year. One of the questions was, how are you adjusting to a weaker U.S. dollar? And the top answers were gold and then followed by crypto. So gold was the leader in that sense, but crypto is certainly carving out its role within investors' portfolio.
Yeah, and let's talk about kind of concerns. It looks like you polled people and were like, what are you most worried about in the context of your portfolio? Any interesting findings there in terms of specifically what people are concerned about?
Yeah, I thought it was kind of interesting that inflation is still the top concern. So we saw that worry decrease down to 31% of respondents said that that inflation was their biggest worry. Or excuse me, it was 31 last quarter. It decreased down to 28%. I'm kind of surprised to still see inflation being that top worry. I know there's the rhetoric with tariffs and how trade policy could potentially impact inflation, and we'll hear more about that today with the Fed on tap at 2 and 2:30. But the global economy worries for a global economy went up. It was the number 2 worry, up to 25%. So there's only 3 points of difference between the top 2 concerns, and the global concerns for the global economy have gone up a lot over the last year. But I'm still surprised that wasn't the top concern. But inflation still remains top of mind for investors.
Brett, I have a question for you because I know I read that one of the findings was a lot of investors want to move to international stocks. I think it was like a quarter of them plan to decrease exposure to U.S. stocks. Do you think that's based on all the headlines we're seeing? They don't love like the narrative of our role in the Middle East, what we're doing east versus with China, or just like all the protests happening in America. Like, why do you think this trend is now accelerating on trying to get international exposure rather than domestic?
I think it's a little bit of everything. I mean, on the one hand, we see like the dollar index hitting a 3-year low, and I think investors start to, they see those headlines or they see the charts, they see the narrative on social, and then you kind of pair it with sort of everything else that's happening. You see how well like European equities started off the year, and then they did have that they did have that spike of volatility like we had, but you still look at something like the DAX, which has been performing really well, or European equities are aggressively outperforming U.S. stocks so far this year, even though we have had that nice rebound off the lows. You look at gold has done so well. I think in these last 2 quarters, or I guess when we did the survey, the first 5 months of this year, really have investors kind of looking at ways that they can diversify their portfolios. And they're definitely not abandoning U.S. stocks, but I think they're realizing that they're not the only game in town, or at least they haven't been the only game in town so far this year. We've seen such good performance from, be it Bitcoin, gold, European equities. And I think that just kind of has woken investors up to the idea that there's more than just the S&P and NASDAQ, and they're kind of venturing around, finding different ways to look for alpha.
Mm-hmm.
Are there any standout names that are particularly trending in that category? Like we talked about quite often here, Mercado Libre is like the Amazon of South America. Are there any names or even themes emerging in terms of interest in pockets outside the U.S.?
That's a good question. In terms of like specific equities, we don't tend to get into them in the surveys. Once in a while we will with the Magnificent Seven, and we'll kind of dive into those 7 names specifically. This quarter we did not, or we'll do AI stocks broadly. But in terms of like specific names, we don't really tend to get into it with retail.
Got it. And then I got to ask, because the last time we talked to you, you guys weren't public yet. So congrats on the IPO. I don't know if you can share anything, but I'm always curious about how the IPO excitement and reception has been within your users. Do you have any data of, adoption or interest in investing in eToro from people on eToro? Is that something you guys are actively monitoring?
That's a good question. Off the top of my head, I don't have the data. I know we track like open positions and across the board, across the platform, and break it down by country and everything. I don't know. I don't have eToro stats off the top of my head in that regard.
Okay.
But
I didn't think you would, but I thought maybe I'd sneak it in and you'd be like, well, actually.
Yeah.
But IPO is definitely, this might be captured after this survey, but obviously we had wave of IPOs. We had Circle go, we had Chime go. Do you get feedback from the community on their interests or appetite for IPOs over time, or have any insights into how your audience is feeling about those opportunities?
Yeah, look, I think even if we speak more like broadly of retail, not just necessarily eToro's investors, but retail as a whole, they have a risk appetite, and at times that can get them into trouble. But a lot of times it can be a really opportunistic thing for them. And I think IPOs are just a good way to kind of gauge that appetite overall. You look at, we were fortunate enough to get a decline in volatility and a cleaner environment to go public in, and there was a stretch there in April where it looked like this is. I don't know what the new issues market is going to look like, but things tempered down and calmed down enough where we could get our IPO out the door, and a handful of others, like you mentioned, Circle's had I don't know that it could really have been a better introduction to a public market for them. I think it speaks well to the appetite on Wall Street right now. I think it speaks well to retail investors and how they're viewing the markets right now. And if we can kind of keep this sort of calmness to the markets, I think it does set up for a good second half, because we are down overall on the IPO count for the year versus like past years. So it would be really nice if we could have a strong second half and sort of keep that market strength alive and sort of see that risk appetite still there.
Yeah, and then just psychologically, I mean, we talk a lot on the show about retail buying the dip, institutional being slower to do so. It seemed like based on your data, that's obviously lining up. People are seeing this as a buying opportunity. And I noticed you had a note there, something interesting about what exactly they were buying, what they weren't buying, risk appetite. Can you quickly voice that over? When people are buying the dip, is it all to, index funds, safe opportunities, or are they going all in across everything?
Well, I think in that sense, there's a couple different interesting narratives. So the first one, so this survey, we did kind of focus on crypto and gold a lot. And part of that has to do with different macro related risks, like whether it's geopolitical or the currency fluctuations, the dollar. But I, from my perspective, my kind of takeaway from it, especially looking at, it's not like we saw a spike in crypto just in Q2 and it was out of the blue. Like, we've seen a steady increase in that regard. And I think investors are increasingly looking for different areas to invest. They're not just approaching it as like a stocks and bonds portfolio and that's it. They're looking at different alternative investments or different areas to put their money in. When you look at like gold, or at least to me, when I look at gold, I think of it as sort of like a safe haven, risk off sort of investment that, sort of like you buy and you put it in the safe at home or whatever, you buy the GLD and you don't touch it. But when you look at its performance, hasn't really been how it works. Is that the gold has outperformed the S&P 3 out of the last 5 years and 4 out of the last 7. Like, it's been a very solid performer. And the fact that it's not as correlated to equities is definitely a bonus, because you look at something like crypto, which is more of definitely a risk on asset. It does have that sort of correlation with, especially with tech stocks. And so I think investors are really kind of looking for performance, and if it happens to come with the benefit of, a lower correlation to their other assets, and that's an added bonus. But I think they're really looking for that outperformance. And then you asked about when they buy the dip. I think retail has this sort of, and you guys know quite well, working, doing the work that you do with Stocktwits, there's this like assumption that retail's always, they're dumb money. And I don't feel like that's a very good description for them Maybe 20 or 30 years ago when it took a long time to get their information or to act on things, yeah, maybe they were the bag holders in that case. And it's not that retail doesn't make any mistakes, because they do. We all do. But when you look at the way information flows now, like social media is a great example, or even how technology influences investing, like you can shorten the learning curve so much with like either Discord rooms or YouTube videos. Retail is so quick to move now and to dig out the theses. And Shay can, I think touch on this too as well. Like the Palantirs, the Hims, the Robin Hoods, when those names were single digit names, retail was all over them. And now they're, 10, 15 baggers from those levels. And that's the group that really benefited from that, I think. So when it comes to buying the dip, they are opportunistic.
Yeah,
So,
it's
I mean,
go ahead, Shay.
To add more color to what Brett's saying, I think a lot of the issue on the institutional side is they're backwards looking. They wait for proof in the spreadsheets in Excel before making a big assumption on what things are going to become. Where retail, we don't need that kind of proof. We are a lot more forward looking. There's so many different avenues on Stocktwits, the show, on Twitter and FinTwit, where you get real research that's in line, that's adjacent to the institutional side, that you believe in a story and you're willing to risk betting on that narrative, even though it's a story. It's not really proof yet. It's not facts, but you're betting on a story and you're willing to take that risk. The smart money, they don't have the luxury, maybe because there's specific red tape bureaucracies that they play by, and they aren't able to stick their neck out on saying this is where the puck's heading, because their whole career can get blown up if they get it wrong. So it makes more sense for them to not be as risky, because why risk the biscuit on sticking your neck out and getting it wrong, and then all of a sudden you have no career? Where for retail, it's their side. It's not side hustle, but like it's not their bread and butter of where they make all their money. So they're willing to risk on this narrative. And AI, retail has nailed AI. That dumb money is not dumb for the specific super cycle we're experiencing, and they've known where the puck's heading. And not just AI, same in space, Rock Lab and ASTS. Like a lot of retail was ahead of that before the institution was, and now institutions have to pay a premium that retail didn't have to 80% ago. So I think this is somewhat of becoming a trend where I think handling super cycles, it's actually more efficient on the retail side, the institution side, because it's more of a story than maybe outside of those super cycle years, like I don't know, after cloud and before AI. That was like an interesting phase where like not many revolutions were happening, so you didn't have to be so forward looking that institutions were considered smart money. But this is the first time in like history of the stock market we have multiple super cycles happening at the same time: AI, quantum, electrification, space. A lot of these things are stories and they're inevitabilities, but they're stories, and institution or smart money can't bet aggressively on that because they don't see the proof in their spreadsheets yet. That's an advantage for retail, and I think that's what Brett's alluding to, where they're not really dumb. It's kind of they actually have the advantage over smart money because they don't have the red tape bureaucracy anchoring them down on their investments.
Yeah, that's such a good articulation. I've never heard it put that way, but it makes a lot of sense. Like, especially if you're like a niche researcher. Like I know, Shay, you got your pockets that you go really deep on. And I know they have niches within some of these institutional places, but it's like a different level of people really burrowing within a topic. And to your point, they're not going to live or die based on people getting mad at them, which has higher risk because you get, some bad information out there. But it's also, you get people sticking their necks out in ways that have, benefit.
I will also say, like, we don't have the .com scarring in our PTSD for a lot of like the dumb money, where like a lot of the institutions, like they lived through that whole experience, and that's why like they were scarred from like going on that story stock, the narrative trend, and they don't want to live through that experience again. So the scarring is preventing them from being a visionary outlet, and retail doesn't have that. Like for me, like I don't know, I'm 30, I'm a soft 32, so I think that I wasn't around during the .com era blow up, and 2008, like I was in high school. Like I think maybe that's why I'm willing to like not be ignorant, but like believe in my thesis so aggressively and not letting it hold back. But yeah, maybe it's just a generational thing. That could absolutely be the case.
Yeah, right on missing that tech bubble. Bret, before we let you ride off into the sunset, based on the data you saw from this survey, for your next survey or looking ahead into the summer months, where are you guys going to be focused on in terms of your research and what you're observing specifically among eToro investors?
Yeah, I think, from my perspective, it's really going to be how do they handle if we see some summer volatility, and maybe it gets kicked off today with the Fed, maybe not. Maybe it's just the sort of the routine summer doldrums where we tend to have slower trading, lower volumes. If we see those pockets of volatility, at what level or what point does retail feel comfortable stepping in? I know we have a follow-up to this from the same survey, a follow-up release in a couple of weeks that kind of digs into the numbers between regarding how investors view risk and at what points in pullbacks they tend to step in. So I think some of that information will be really really interesting about the group. But yeah, for me, it's just going to be when do they step in into the pullbacks and sort of, will we get that pullback in the summer?
All right. Well, you'll have to come back as soon as you have the new information. It's always interesting to hear from somebody who has a line of sight into all that. So, Bret, thank you so much for joining us, and we'll let you hop.
All right. Sounds good, guys. It's always a pleasure.
Bye-bye. All right, Shay, we got the big Fed meeting today, which everyone knows what's going to happen pretty much. Was it 99.1%?
There's a chance. There's a chance. You never know.
There's a chance.
No, it's going to be nothing. I mean, I think we're going to get the dot plot today.
Yes.
So maybe that'll be like the only nugget from today. But again, like it's happening on a Friday, soft Friday. Let's just say that.
Yeah.
And nothing's going to happen. Like, they're going to be the same rhetoric. We're going to be data dependent. We are a little worried about the escalations on inflation due to the tariffs. There is a lot of noise happening in the Middle East that we have to monitor. Employment is strong. Growth is strong. It's just gonna be the same. I'm not even gonna tune in really. I'm gonna be like, I'm gonna be on Twitter watching everyone else like kind of give me information,
react to the reactions.
Yeah, it's nothing.
Well, that's all going down at 2 p.m. if you're so inclined. But to your point, I feel like we're the level of drama we've become accustomed to in the stock market. These meetings just feel boring, which I think it's good. I think that's good that they're boring. It's good that no one's like flying off the handle. But in terms of like events, like, you think about an NVIDIA event or God knows what else, like you're like, oh, what are they going to say? This, you're like, yeah, okay, I think I got a good idea. I think the dot plot will be interesting. I was reading that at least like 2 of the changed votes could shift the median from 2 cuts to 1. So depending on where people move, there could be like some movement, but TBD if people even alter those. But that, of course, is at 2 p.m. And I think you could follow along in Stocktwits if it's not going to be the most dramatic thing you've ever seen, but it's entertaining. There might be some commentary, and we'll have the dot plots. Let's look at what else is going on in the market today. Oh, did you see this memo, Shay, from Andy Jassy at Amazon?
Of course, he's preaching to the choir.
Let's
it's
talk about that.
going to happen. Yeah, I mean, he was essentially saying that he's going to reduce their workforces are going to reduce due to Gen AI or AI agents, whatever you want to call it. It's such a reality that it's crazy that people still get shocked when they see these kind of headlines. Like, it's so it's one of the few obvious things where I'm like 99.9, like the Fed aren't cutting rates today. That's how clear I am about this trend where, of course, like there's always 20 to 25% of any team, there's a weak links, like where like we don't really need them. Like the strong asset on this team is probably making up for like a lot of the weakness from this individual. So that 25% reduction is going to be very quick. Like low performers, you're gone. I also do believe that the structure of contracts are going to change. And I think that the structure is going to be more performance-based, and it's going to be more of a check-in every quarter. So you don't have to pay that 6-month severance. And the severance is going to be completely gone. There's going to be no severance anymore. We are not in an employee market ever again. I really think we're going to be an employer market forever. And because of that, they have leverage. They can force us to come in every single day. They can adjust the language of the contract where 2-week notice and that's it. No severance. We don't, if you have PTO, I honestly believe that PTO is going to be gone. It's going to be the unlimited PTO, and you're going to have to get approval from your supervisor in order to do so. And we'll see how that goes. I don't think it's going to be, it's going to be like maybe a week, a year they can take off.
Yeah.
I just
what do you
think
always say? Capitalism's going to get brutal.
brutal. It's
No
going to accelerate.
PTO.
Yeah. 100. It's going to be ugly. And that's why before, again, don't be like smart money and like wait until it becomes facts and you're seeing it right firsthand in your lives. Like preempt it, get ahead of it, knowing this is where the puck is heading. It's an actual absolute fact. Adjust your life accordingly, build something for yourself where when it does become a reality, you're not shackled to the whims of whatever your employer is and you can't have any say. Like try to build something for yourself. It's really important now because capitalism is going to get brutal. I think we're going to have a universal basic income eventually. Maybe not the standard UBI, but like some kind of derivative of it because unemployment is going to get in the teens and things are going to get brutal. I don't know when. Hopefully it's not going to happen. I really hope it doesn't because it's not going to be good for mankind. But like, I'm just trying to create a sober reminder that I think this is the reality, and it's really important to prepare, not be ignorant, not ignorant, but naive about it.
Yeah, and people acting shocked that Jassy put out this memo. This is such an Amazon move. They're like radical candor. They just say it. That's like in their DNA. I don't know if you saw this, Shay, but in New York, the state added a new checkbox to the WARN Act. So they have to alert the state when they're going to do layoffs. They added a checkbox where people can check that if it was caused by automation. It's optional for now, so no one's used it so far, but it makes you wonder, are they going to require it? Which but like this is the kind of impossible to prove. You can, there's very few cases I think where it's that cut and dry, where it's like, oh, the machine will do this 20% better over here and 30% better over there. Therefore, ipso facto, that person's gone. But I think you're right. We're going to start seeing more numbers around that. And I'm with you. I think what's really interesting is, if you're a thematic around AI, the faster that thematic goes, the better those stocks are doing. Feasibly, the faster this side goes on the employment front. So catch 22.
That could be the way to play it. If you don't have you can't figure out how to get ahead of this, like invest in the companies that will be the leaders of this because they're going to benefit off it. So maybe that's the route. But yeah, I mean, that's every tech revolution we've ever had have been enablers for people. Cloud.com, internet, like everything enabled consumers. It wasn't really replacing anything. That's why I've been saying AI is intelligence. And that's totally different than any tech revolution because it's going to replace a lot of characteristics of every industry. It's not like any of the tech revolutions before that were enabling industries. Very different and very disruptive. So yeah, I think it sucks because like Palantir is a $300 billion company already. And a lot of the cybersecurity companies are huge already. And a lot of the AI winners, they proved they're going to be winners and the market's pricing them accordingly. And now it's like, I wouldn't bet my life savings on these kind of names right now. Like it's way overextended, but I just think it's really important to just think about Malcolm Gladwell, like those 10,000, the Outliers book, 10,000 hours. Like you won't know what skills that you need to form in this new world we're about to enter, but it's really important to start putting those hours in, work towards that 10,000 hours. So by the time this reality hits, you'll be an expert in something that you weren't an expert before, that you'll be prepared for this new world. It's like, think of it that way. My 2 cents.
No, I think it's important. I think there's the, hide in the corner versus, okay, I'm going to come up with a plan, even if the plan is loose. So, but you know what? Props to Amazon for just saying it. Like sometimes bad news, whatever, hard news, just say it. Just get it out there. Like, and now what they did, it favored all these other tech companies because they're going to just echo that and point to him. And I mean, the Anthropic guy really set it all off. But
yeah.
Well, speaking of not working, we are off tomorrow because it's a half day in the markets, I believe, right? It's half day or is it fully closed?
It's fully closed.
Fully closed. Okay. Yeah, I got confused. The third's a half day. So obviously the market's closed tomorrow. Friday, we're off as well. We'll see you Monday. So you have a lot of time to let us know what you guys want us to prepare for and talk about on Monday. Shy, I hope you have an amazing next few days. I guess I won't see you for a bit.
Yeah, see everyone Monday. Try to rest up because I don't think anything will happen this week, and hopefully things don't escalate overseas.
All right. Bye, everyone.